Hello guys, it's the 23rd of June 2017. I'm Chris Bailey from daxtrader.co.uk and this is the daily webinar to run through the technical analysis for the DAX. Okay, I'm just going to mute up everybody here and we'll get started. Okay, fantastic. Okay, so we've got a daily chart in front of us here. This normally tends to be where I'm starting as soon as I open up the market, just because we've got that ascending triangle pattern. I won't go through it in too much detail. I've gone through it quite enough already, but we know it's a bullish continuation pattern normally, and we're in a bullish trend, high highs, high lows, and this ascending triangle formation is creating an opportunity for a breakout. Breakout higher is normally what will tend to happen, but a breakout lower would potentially signal a reversal. So keeping an eye on that, just to sort of see how that plays out. And this might take quite a while to play out. I mean, we could actually continue to compress inside this pattern until the beginning of July, and it wouldn't be unusual. But we tend to break out before it gets too compressed. So I guess what we're really looking for here is a compression in the range and then an increase in volume to suggest a breakout one direction or another. So keep an eye on the volume from the exchange. If you've got a data feed from Eurex, brilliant. Just keep an eye on the volume pickup. And so that's the daily chart. Nothing really to trade on there at the moment. In terms of strategy, what does it mean when we're trapped in this range? Well, it simply means that you're going to buy low, sell high. So if you get to a particular point where you're at the bottom, sort of 20%, 10, 15, 20% of the range, then there's a good reward to risk ratio there. You can get at least 2 to 1 on your money by trading a bounce and a rotation within that range. It's a strategy that's not fail-proof, foolproof, whatever you want to call it. There is an opportunity for the market to go against you. But when you're trapped in a range-bound trading encourages bounces and rotation. Okay, so in terms of swing opportunities, nothing really. I mean, we are close to 725, which is an opportunity to buy, but make sure you use good risk management. I may as well at this stage as well just offer that these webinars are designed for educational purposes only. They are not providing any investment advice or buy-sell recommendations. Trading financial markets is risky. It involves the risk of losing your invested money. If you decide to enter into a trade off the back of this webinar, it's entirely at your own risk. Okay, on the hour 2 chart, a couple of things I have on the indicator front. This is a 200-day EMA. It's just a standard technical indicator. But as a result of that, I've actually used that as a Bollinger Band, and I've given myself a couple of standard deviations either side. So this is a 1 standard deviation, 2 standard deviation. Bollinger Band from the daily 200 EMA. So we are at the top of the 2 standard deviation EMA. So people were sort of wondering, oh, you know, when we got to 12,850 or whatever it was, why didn't we carry on higher? It was such a great place to buy. Well, that's the reason. Like, we're pretty stretched up here. Market needs to take a moment to pause and catch up. And I use that analogy of the car. You know, if you're going to be buying a used car that's worth 15 grand, why would you spend 20? You know, you need to get good value if you're buying something. So when you're way up here and stretched with 2 standard deviations above the 200 EMA, it's not really good value. But you know, markets are irrational, as the saying goes. So inside a little bit further towards the current day, from sort of mid-May onwards, we've had this rough bull channel marked out, and there's an opportunity to break that. So if you are a breakout trader, you're probably watching this already. So obviously you've got the break lower, which would be below this kind of area here, which is kind of what, 12,650, somewhere along that kind of level. It'd probably be easier to just actually draw a proper line rather than a hand-drawn one. Okay, somebody's just said that there's no audio on the webinar. And as far as I'm aware, everybody else has got audio. Can you just confirm? Because that might just be you. So just double check that you're not muted, Lanzor. Okay, I'll assume that it was just a muted error because I think everyone else has got sound. Okay, and I don't know why I've just told him to turn sound on because he can't hear me. Okay, 1 second, guys. He might have actually just restarted. Anyway, we'll continue. So that's one option. So 650, somewhere around there is a breakout. I'm looking at that as a trap. I'm wondering whether it might actually be a fake break to the downside. Probably just because I'm bullish normally. But if it does break, I think a lot of people are going to join in onto the selling wave. And I think really only a break below that level is going to be significant for me. So I think if we break down, or even this one here, should get better at drawing straight lines. So if we break below this level, it doesn't necessarily mean that we've got a reversal. It's an opportunity to sell. But of course, every move needs to be measured and taken within context of the market. But you've got an area of support there, an area of support there, and it could bounce from any one of those higher. So just be careful, use good risk management, make sure your trading plan can accept that. And I thought that was one of my lines, but it's a Bollinger Band. Okay, the other option, of course, is a breakout to the upside. And again, we are pretty stretched on this target. We are pretty stretched on this, on the current move, because we are 2 standard deviations above the 200 EMA. So maybe we need to be finding lower prices before we go and break out of this channel higher. But as you know already, markets can remain overbought for a long, long time, days, weeks, months, and they can and they will continue to do that. So it doesn't necessarily mean it just because we're overbought, we're going to sell. Monetary policy, fundamental factors, all of that sort of stuff contributes to why we're in the position that we're in, with a really overbought, stretched market, inflated market. So at the moment, we're kind of in the middle of this range, which is no man's land. It's not fun playing in the middle of the range. You don't trade in the middle of a trading range. You wait to find an opportunity for the market to be overbought and oversold, or rotate around value areas, whatever you want to do. But in the middle of a range, you're going to get chopped up. So there's no point in trading. There's no point in scalping it, really, unless you're really used to doing that, or you've got some sort of edge. But I guess the only thing that's really useful at the moment is to kind of map out that tiny mini range there, that little channel, and wait for a break, either higher or lower. It would look like at the moment you've got this kind of move here. So it's like a spike and then a channel. It's a good technical move. Go and take a look at that. Go Google spike and channel and go and see how maybe you would probably look to trade that. But drawing a simple box around the channel and waiting for a break is certainly one option. Okay. If you were going to trade that as a move and that was a breakout lower, you might want to use a fib tool, a Fibonacci extension tool, if you've got it on your platform. Expansion, extension, might be called various things. And if you draw it, like a Fibonacci retracement tool that uses 2 points, high and a low, an expansion tool uses 3, a high, a low, and a pullback. And then it gives you an extension target. So a 100% extension move is a measured move that would measure this point here, A. You can't really see the red line, but it would take that same level again. So that move there would then work out to be the same as that move there. So then, A equals B sort of move. So that's what these expansion tools are very useful for. If that was to happen, that would be a good opportunity. And that kind of fills in with the move I was talking about earlier, which would be this fake break move. So you're breaking below the channel here. Lots of sellers jump in, but that's the end of the measured move right there. So people are just going to buy from there. So all these sellers are going to get trapped. So that's just a strategy that I've kind of been thinking. All right. Let's just take a look at the 5-minute chart and then we'll go over to the volume. Now, if you've got any questions, by the way, feel free to use the chat, which I think you should be able to see by pressing Alt and H, but depending on if you're using Zoom. Otherwise, it should hopefully just pop up. Someone else is also saying no volume, no sound, which is unusual because some of you guys have it and some of you don't, which is very unusual. I will try and fix this for the next one, guys, but for now I'm going to have to continue. Okay, so onto the 5-minute chart. Same sort of thing, got a Bollinger Band here. Don't worry too much about what these levels are. I'm building or have built a strategy, automated strategy that just alerts me when a market is above or below this higher Bollinger Band and whenever there is divergence, and it's often a good opportunity for mean reversion. It's not fail-proof, doesn't work all the time. No system ever does, regardless of what these kind of scammers would say. No system works 100% of the time, it just doesn't. But it does alert some higher probability setups that you can go and explore in the context of the market, see if it fits within your trading plan to take. So at the moment, we're below the center median line of this Bollinger Band move. We are oscillating around the daily pivot, and we are kind of trapped in a bit of a trading range at the moment. And so let's have a look and see if we can mark that out, because there's an opportunity to break. You have a small range here. In fact, that would probably be more of a wedge or a triangle pattern here. You've got a slightly larger move or range. Excuse me. Sort of here. There's a lot of lines going on this chart, so I can appreciate that it might be a little bit difficult to see. But I think at the moment, for short-term trading, if I just zoom in a bit further here. Where are we? There we go. Then that might be the one I'd probably be looking at just right now. So if you're a scalp trader or wanting to get just a few points, a few ticks here or there, just take a look at that kind of move there and see whether or not you think that's an opportunity to trade. It might actually be even shorter than that. There must be some keyboard commands for this. Excuse me. There we go. That sort of move right there. That's probably a clean line. Really getting quite compressed there. So it's a case of whether we do get a breakout. Is that an opportunity to trade? If it breaks lower, then the S1 would be a target. If it breaks higher, then perhaps you could look at the center line on the R1 being the target. All right, so that's kind of the shorter term charts on the time-based stuff. Let's go and have a look at the volume charts. So, right, for some reason I seem to have, there we go, lost my chart. Right, give me 1 second, just want to try and figure out why this has happened. Simple fact is I can't, so let's just do this. All right, so S&P 500, and again, really interesting market to look at, to provide some context for the DAX as well, just because of the huge amount more volume you get on the S&P 500. Now, Friday is not a good day to trade, normally, because, well, lots of different reasons, but from experience, just sort of shows that it can be a little bit unusual. People look to close out positions for the weekend, and you'll tend to find the second half of the session has a lot less volume, so it's a bit more volatile. At the moment, there's an interesting thing that's happening, which is this compressed range. This whole daily trading range here is inside that day. And on the DAX, that day here is actually inside this one. So you've always got these three inside days. Keep an eye out on that. Welcome to whoever's just joined, but I've got to mute you down. Okay, and at the moment, nothing particularly interesting happening with the S&P, so I'm just going to go straight over to the DAX. And one thing I just want to point out here on this chart is that I'm not using a time-based chart. This is not a time-based chart, 5-minute chart or otherwise. This will look different to yours. I'm using a volume chart, which is 250 volume. So for every 250 contracts traded, it will print a new bar. It just provides a different way of displaying the data. And if I use that and just make that a little bit bigger, that pattern I showed you yesterday, guys, a little bit laggy. That is what I was talking about just a moment ago. So you've got the previous trading range, previous or 2 days ago trading range here. You've got the next one in there, and then today in here. So you've got a large kind of compression starting to happen, which offers an opportunity for a break. So keep an eye out on that. You've also got this unusual kind of rotation that's happening on today's chart. Let's just get rid of these lines quick. Quite a sort of an even distribution on the day today, but all within the value area of yesterday. So we haven't even broken out of the value area from yesterday. So that offers an opportunity in itself. You can play the bounces. You can play a buy from yesterday's value area low. You can play a sell from yesterday's value area high. But right now we're pretty much carving out a new sort of higher volume node on this composite profile here on the left, which is all of the data from the current month of June. And because of course previous high volume node was down here at 725, so price is trying to establish a new value area, a new point of control, and accept price at a higher level. So keep an eye out on how that move continues, and see if there's a break. Now we're starting to develop a bit of a double bottom, if you like, at 745, somewhere around here, so look for a break lower. There is this kind of area here which developed yesterday as well that's acted as support already today. I was thinking yesterday that if we do break below this high volume area up here, then we were going to come down to test 725 again, but it actually hasn't happened because this 745 level held. So I'm going to watch out for another retest of that level. If we do break below the current daily low, then I'm looking out for a hold of 730, 725, somewhere around there. If that level breaks and it continues lower, well, then, you know, I'll sit back and wait for another opportunity, but I may well be interested in taking a long at 725 again. Let's just see how the market moves. Friday afternoon is not a fun time to trade. So if it takes all morning to get there, then I might not be particularly excited about it. And as far as the move is going at the moment, I mean, we do have this kind of almost, again, pattern playing out on the volume chart where you might have this A and B, which would also come down to somewhere near this value area low from yesterday. So it kind of just adds a little bit of confluence to the idea. So look and see how much volume is actually trading at the moment on the DOM. If I can get it to speed up, we're looking at just barely double digits. I mean, some are even single. I mean, this is really low volume. It's not good to trade. So wait for the overlap in the afternoon session, which unfortunately puts you into Friday afternoon category. So not the best conditions to trade really, but you know, it's not going to stop us, is it? Nothing really exciting happening on Delta. We're just sort of trading slightly positive, but not really trending. So not really saying anything. It's supporting the fact that we're ranging. So it supports the strategy that you buy the low of the range, sell the high of the range. Where is the low of the range? Well, it would be yesterday's value area low. So that would have been a good opportunity. Whereas the high, it's going to be the value area high from yesterday. There's still valid signals, still oscillating around yesterday's point of control as well. So wait for a break. So that kind of gives a bit of an idea as to what I'm thinking. And again, just if you've got any questions you want to throw my way, feel free to use this chat box or send me a message in Telegram. If you want me to look at any particular market, let me know as well. Some I can use on this software, some I can't. I don't use Forex using this. I only use exchanges. So it's commodities, index derivatives. Well, I'll show you the markets. In fact, if I can get, wow, so many screens open. All right, so let's have a look at markets you can look at on this. You probably already have your demo anyway, so you probably already checked this out. But if you haven't, go and get that. And you can see these instruments for yourself. There's quite a few. You've got all the New York Stock Index equities that you can look at. And there are a lot of them, so this might take a while to open. Just click that. So you can, I might have clicked it twice. So you could look at all the different shares that are in there. So good luck with that. You've got all the NASDAQ components as well. There's a lot you can go in and check on those. You've got your metals, you've got the interest rates as well, which are useful. Treasury notes, that sort of stuff. You do have in FX, but it's futures, not spot. So be careful of that. You've got your equity index products. So a few different choices that are on there. Your energy products and your agricultural. So you've got your commodities. And of course, your gold and platinum, etc. So go and take a look at some of those markets as well. And there are opportunities. Oil is a ridiculous one because the amount of oil, volume that gets traded in that market is crazy. So that's always a good one to watch. So to get yourself your demo, just go onto the website and you can click on DAX order flow here. And there's a couple of links that you can click on to go and get it. It's a free download. You get access to a Eurex feed during the demo. And then I think Jean-Paul, the guy who I deal with, will be able to probably take over from there and answer any questions that you've got if you want to know more. We'll be holding more webinars on how to use the software as well. So if you are interested, stick around for those. But for today, that's pretty much what I'll do to wrap up. I'll go and get this uploaded and put onto the article for today. Yeah, thanks for joining. And let me just see if we've got anything here. Volume on copper. Okay, I'll take a look for you, Chris. Let me just see. I've got to be honest, I haven't ever looked at copper, so possibly going to need to be steered on that one. Let me just see. I would imagine it would be this one. I'm just going to click on the continuous. So this is copper futures, Chris, just to let you know as well. I mean, current contract, I think, is July 2017, maybe because June finished last Friday. But I'll just click on continuous just in case I'm wrong. Let's see if it's actually included in my subscription. I'll just choose a different template. See if we've got the DOM. We do. Yeah, there's plenty of volume being traded on there at the moment. But that gives you an access to the DOM here. Does that answer your question, Chris? Okay, good. All right, so and the great thing about this software is that I've just zoomed in and you can see, I mean, I don't know what chart it says. I think it's a 5-minute chart, maybe. Yeah, 5-minute time chart. And these candles that we're looking at here, but it is giving you the individual market profile, I think, or clusters or market profile. The bid ask volume profile, I think is what this one is. So it's showing you how much is on the bid, how much is on the ask, where the volume is being traded individually per tick or per level. And of course, when you zoom out, you don't need that level of granularity. You can just use the regular time chart that you're used to. And of course, you can choose bars if you really don't want that, or candles, and it'll take it out. But as you zoom in, you'll get a lot more data. So it's really great. Go and grab it, and I hope it serves you as well as it does for me. So thanks very much for joining us, guys. I will wrap it up there, and I will be back probably later on, maybe this afternoon stroke evening, to do a quick wrap up ready for Monday. And I'll be back again on Monday with another webinar. So make sure you join. Take care. Make a good trading day, and I'll catch up with you later.